How's it going, guys? So today I'm going to be showing you how to actually invest in index funds. I'm going to be giving you guys an overview of the Vanguard platform of ETFs that are available and showing you guys how you can invest both through an ETF, an exchange traded fund, or through the actual Vanguard website. Now, when I invest in index funds, I do this through ETFs, so I can't actually show you the process of doing this on the Vanguard website because that's not how I invest in index funds. I prefer to do it as the ETF. That way you can trade the individual shares. So that's just the way I do it. It's up to your preference and also how much you're planning to invest initially. But I'm going to show you guys how you go about navigating the website. I did this in another video previously too, but I'm going to show you guys some new stuff. We're going to go over an actual strategy of a plan that you could follow if you wanted to invest in a bond ETF as well as a stock ETF. And then at the end of the video, I'm going to be switching my camera over and showing you guys the process on the Robinhood app of how to actually go about finding the ETF on Robinhood and where you would go to purchase it. So I know I've mentioned this in a couple of videos previously, but for those of you that have not seen those, an ETF is what we call an exchange traded fund. It basically allows you to invest in an index fund through individual share ownership. So one of the main problems previously with funds, in fact, whether it be an index fund or a mutual fund, is there are high barriers to entry because you need to fulfill a minimum account balance in order to open an account. So I'm going to show you guys what that is for Vanguard and these funds, but the good news is that with ETFs you can start investing in these funds for the price of one share of ownership. So let's go ahead and start by just navigating this page here, and I'm going to link all of this up in the description if you guys want to look more into this. But these are the ETFs that Vanguard has available. They currently have 56 different ETFs. They have bond ETFs. They have investment grade bonds, tax exempt bonds. They have stock ETFs that are both large cap, mid cap, and small cap. They have some international ETFs. And then they also have some sector and specialty ETFs. They have a real estate investment trust ETF as well. So I did a whole video talking about what are the best index funds to invest in. I will go ahead and link that up at the end if you guys want to see that video. It would be a good one that would complement the information in this one as well. But what we're going to do is we're going to focus on two ETFs in this video. First of all, we're going to look at BLV, which is the long-term bond ETF available through Vanguard, and also VOO, which is going to be, once I find it here, where is it? Okay, VOO is the S&P 500 ETF. So this fund tracks the performance of the S&P 500, and it basically allows you to have good exposure to a number of U.S. stocks, and it basically gives you diversification within that fund because you're going to have both large cap, mid cap, and small cap stocks because it is a combination of the 500 largest companies on the U.S. markets. So when you go ahead and click on the ETF, we're going to start with BLV. It brings you over to this page right here. It says Vanguard Long-Term Bond ETF, symbol BLV. So basically, guys, this is where you can learn about this fund, learn more about what's within this fund. This is a great one that I recommend to people because due to the fact that it is a long-term ETF, you're going to have a slightly higher risk there, so the return is going to be better. You have to remember that with bonds, the higher the risk is, the higher the return is going to be. So for especially young people, you can afford to be a little bit more aggressive, especially with bonds. So I recommend a well-diversified long-term bond fund for young people. And if you're maybe an older person or you're not as risk tolerant, maybe go back over here on the ETF list and look at a shorter-term bond ETF or even a treasury bond ETF. That'll be a lower return, but significantly lower risk and, less volatility. So that's always an option available to you. But so when you go to the website here, you see a message here that says, also available as Investor Shares Mutual Fund. So those are basically the two options when it comes to investing in this particular fund. You can buy individual shares through an ETF where you buy them on an exchange just like a stock, or you can open up an account through Vanguard. Now, if you decide to do that, I clicked on this page here, which all I did is click on the link here as Investor Shares, and now we have the Vanguard Long-Term Bond Index Fund, which is going to be under the symbol VBLTX. So this is an index fund you can invest in, but you're going to invest in it through the Vanguard website, And the main reason that people oftentimes will not do this is this right here. As you guys can see, the minimum investment for this is $3,000. So you need at least $3,000 just to open up an account with Vanguard and open up the fund to buy the Vanguard long-term bond index fund through their mutual fund rather than buying it through individual shares. And there's no real difference as far as the expense ratio or anything. And if you guys are using Robinhood, which is what I use, you're not paying any fees to your broker for trading. So there's not really an advantage here to having a fund through Vanguard versus using your broker and doing an ETF. So it's really up to you guys what route you want to go. Like I said, I always go through the ETFs. It's just easier for me to keep track of having stuff in one place. And then if we go over here and look at the S&P 500 ETF VOO, it's a very popular fund. It's one that I recommend. Again, this is the where you would go for the individual shares. They're under the symbol VOO. And then if you click here and go to investor shares, then as you can see, again, it's a $3,000 minimum investment to buy into this fund if you wanted to invest through the Vanguard website. So I'm going to be under the assumption that most of you guys are interested in investing through the ETF option. So that's going to be the focus for the rest of this video. The other thing is you also do have the option of investing through Admiral Shares. Admiral Shares allow you to have a lower expense ratio because there is a much higher minimum investment. They're basically letting you take advantage of having a large account. So because the account is larger, the expense ratio is lower. And as you guys can see for the Admiral Shares, the minimum investment for this is $10,000 instead of $3,000. So, but the expense ratio is lower. Over here it's 0.04%. And we'll go back and see what it was on the other one. For the one with the lower minimum balance, it's 0.14%. So actually, it's a much lower expense ratio to go through the Admiral Shares, but you would have to have $10,000 minimum to get started with Admiral Shares through Vanguard. So that's probably not something that's going to be an option that makes sense for most of us. So going forward, we're going to look at the stock symbols, okay? So as we said, VOO, the Vanguard 500 Index Fund, you would just type in VOO on your stockbroker app, whatever you're using, or in Google. All I typed in was VOO stock, and as you can see, right now it's trading at $245.75 per share. So what that means, guys, is you would need $245.75 right now to invest in one share of VOO, but that is a lot less than $3,000, which would be your minimum amount for the other option. And then for BLV, that long-term bond fund, the symbol again BLV, I just typed in BLV stock, and as you can see, it is $94.59 per share. So for less than $100, you can get started with that long-term bond fund. Now, one of the strategies I talk about often is dollar cost averaging. That is the best strategy when it comes to investing in index funds because what you are doing is you're accumulating shares over time, and as a result, you're buying the same time and the same amount every single month. So what happens is you buy shares up high, you also buy shares down low, and over a long period of time, you're paying the market average return for that ownership or for that fund. Now, I know this is probably something you guys have heard of before if you're familiar with my videos, so I'm not going to go into it at length. I talk about this more in my other video that I'll link up at the end, but I want to give you guys an actual real-world example of how you would do this because I know it's good to talk theory and the concepts, but it's better to actually see a real-world example. So I'm going to use an example of somebody who is looking to invest $400 a month following dollar cost averaging. So let's say every month on the first of the month or whatever the first trading day is of that month, they're going to invest their $400, and that's going to be their dollar cost averaging strategy. So let's say this person is in their 30s. They're looking to have, a pretty aggressive portfolio, but they also want to have some bond exposure. So they're looking to have 80% stock ownership and 20% bond ownership. So they're going to look at our two funds we talked about there, the Vanguard 500 Fund VOO, and then that long-term bond ETF BLV. So how would you go about getting 80%, 20% diversity here, where 80% is stocks and 20% is bonds when you have to buy individual shares? It's going to be a little bit tricky, and you guys are going to have to do some math here to kind of figure this out, and it's never going to be perfect. You're never going to have exactly 80% ownership or 20% bonds because of the fact that the prices are always changing, and when you're buying individual shares, it's going to be hard to get that ratio perfect. Now, as you accumulate more shares over time, you're going to be able to do what is called rebalancing, which is going going to be selling one thing to buy another just to keep your diversification about the same. So let's say you had invested and you had an 80-20 split, and then over the next 6 months your stocks went up more than your bonds did, and you found that you had at that point 90% stocks and 10% bonds. Well, at that point what you would do is sell some of your shares of your stocks, or in this case your VOO, your stock fund, the Vanguard 500 fund. You would sell a couple of shares of that and buy your bond fund. That way you were back to an 80-20 split. As far as rebalancing goes, most people do it twice a year, but the rule of thumb that I follow is anytime your portfolio is about 10% out of whack, that is when I rebalance. So if you're looking for an 80-20 split, if you were 90-10 or 70-30, that is when I would rebalance and get back to 80-20. But you can also rebalance as you are adding to your portfolio just by adding the right number of shares and trying to keep your numbers about where they should be. But if you're looking to get started with an 80-20 split here, what you would do is the first month you would buy 1 share of VOO, and we're assuming that VOO is $250 a share and BLV is $100 a share just for easy numbers' sake. So as we said, you have $400 each month to invest. So the first month you're only investing $250, or the cost of 1 share of VOO, and you're going to hold the other $150 as cash in your account. So now you have a cash balance of $550 that following month after you make your contribution. Now you're going to be investing in 1 share of VOO and 1 share of BLV the following month, which is going to give you, again, a cash surplus at this point of $200, because it's only going to cost you $350 roughly for 1 share of VOO and 1 share of BLV. Now the following month you're going to do the exact same thing, buy 1 share of VOO and 1 share of BLV, and at this point you'll have a cash surplus of about $250. Now month number 4, you're going to buy 2 shares of VOO and 1 share of BLV, which is going to burn up a lot of that cash surplus, giving you a $50 cash surplus. Month number 5, you're going to buy just 1 share of VOO, giving you a $200 cash balance. And then the 6th month, you're going to basically drain all of the cash value of your account and your contribution by investing in 2 shares of VOO and 1 share of BLV. So over the course of 6 months, that is $2,400 invested following a dollar cost averaging type strategy. And as a result, you would have accumulated 8 shares of VOO, the Vanguard 500 fund, and 4 shares of BLV, that long-term bond ETF. So if we're looking and we're assuming about $250 a share for VOO, that'll be about a $2,000 investment in the Vanguard 500 ETF and a $400 investment in the long-term bond ETF, which is going to give you that 20% bond, 80% stock split there. And again, this is in a perfect scenario. Like I said, guys, these prices are going to change, but your goal is just to stay within about 10% of your ideal portfolio diversification. So this is what you're actually going to be doing. Number 1, you're going to need to figure out how much you want to invest each month. Number 2, you're going to figure out what funds you want to be involved with. And then you're going to try to come up with a strategy to meet your diversification needs in the best way possible. So it's going to take a little bit of math here. This took me about 10 minutes to figure out. It wasn't too bad. But you guys have to understand you're never going to get these numbers to be perfect. So now we are going to jump over to my camera and I'm going to show you guys how to look up these funds on the Robinhood app. Alright guys, so as you can see, I now have my Robinhood app open, and I use Robinhood right now as my primary account, but I also still have the majority of my money over in Scottrade. So basically what you guys are going to do is obviously log in, type in your passcode, which I'm not going to share with you guys for obvious reasons, and then you go over here to the search bar where you're going to search for this, and we're going to first search for VOO, so obviously just type in VOO on the keyboard, and as we can see, the Vanguard S&P 500 ETF comes up. We go ahead and click on that, and as we can see, it's now $242.90 a share. $245.83 after it updated. And what you want to do is you're going to hit buy, and this is where you would enter how many shares of VOO you would want to buy. Obviously, I'm not going to be buying this right now, and then you would just enter, like, let's say you were going to do 2 shares. The estimated cost would be $491.68. When you hit review, and then all you would have to do at this point is swipe up in order to purchase that, which I'm not going to do. And then I'll just show you the same exact thing for the bond ETF BLV. So again, we just go to our search bar here, type in BLV, and here we have the Vanguard long-term bond ETF. and this is currently trading at, once it refreshes here, I guess that one did, it's $94.68 per share. And same thing, you would just hit buy at the bottom, type in the number of shares you were looking to buy, and then swipe up and your order would be filled in a matter of seconds at that point. But yeah, so that's pretty much it, guys. That is how you would go about buying ETFs on Robinhood. You can use many different brokers out there. I recommend Robinhood for people in the US because it is $0 commission cost, $0 minimum account balance. But I know a lot of people don't have the option to use Robinhood, but if you do, I would certainly recommend using that. Anyways, guys, that's all I got for this video. Thanks for taking the time to watch it, and I will see you in the next one.